GDP is on fire despite tariffs. Hardest hit is the army of doomcasters who have been praying for a Trump slump. Last week, the Bureau of Economic Statistics revised GDP growth for the second quarter up to an impressive 3.8%, up from 3.0 in their original estimate. The revision was growth in consumer spending, while imports unsurprisingly fell. In other words, Americans are spending more, and it is going to domestic producers. Meanwhile, the Atlanta Fed now estimates GDP in the third quarter, the one we're in now, will come in at 3.9. Note, we had a negative GDP number in Trump's first quarter, which was a statistical figment of import front-loading. So even it out for all of 2025, and prediction market Kalshi predicts 1.9% growth for the year. Now, 1.9 is perfectly respectable, considering mass deportations and federal layoffs mechanically subtract from GDP, even though they make us richer. As in, GDP counts all government spending, even welfare for migrants or paying EPA bureaucrats to shut down farms, while GDP also counts migrant spending when they get haircuts or go to the dentist. Given an estimated 2 million illegals have left while 200,000 federal workers have been laid off, we shed a lot of fake GDP. Moreover, 1.9 is a big jump from what it was predicted back in April during the trade war. Back then, growth for the year was supposed to be just 0.5%, which is nearly a recession. Now, it could be a lot better, but the Fed has kept interest rates high. It's very hard to get 3% growth when rates are 5%. Moreover, Congress missed their chance to return trillions of stolen goods to the American people by cutting spending, while deregulation, which also grows the economy, has been a lot slower than many of us hoped for when Doge kicked off. So what's next? Brought to you by I Trust Capital. For the next year, going into the all-important midterms, the biggest moving parts on GDP are rate cuts at the Fed and investment, including oil drilling and factory building under Trump. On the Fed, every point of rate cut is worth roughly 850,000 jobs and 1.5 points of GDP, and markets are now predicting a full point cut in the coming year, with Trump pushing for 2, so this will be a big boost for both jobs and GDP. The other is investment. So oil production has barely moved this year, it's up just 2%, because it takes a long time to sink a new well, while environmental red tape is still a problem. But that should start coming online in the next 12 months. Much bigger is the factory boom that's coming, much of it extorted from countries like Japan or Europe as part of Trump's trade deals, while Trump arm twists companies like Apple or Taiwan Semiconductor to build in America. So far, there's at least $4 trillion in additional investment coming, which is more than the entire economy normally produces. And historically, every trillion of investment is good for more than 1 million jobs. So it'll take time to get all that money deployed, but between rate cuts and investment, we could be looking at monster numbers by 2027. Okay, we'll be watching. See you next time.